I want to welcome in Mark Avalon, founder and chief investment officer of Potomac Wealth Advisors. Mark, thank you so much for joining us today. Want to talk about today's jobs report. Obviously, that seems to be the trigger for what we're seeing in terms of the gains on Wall Street today. The economy grew by 139,000 jobs in May. Unemployment rate coming in at 4.2%. That's in line, but the jobs number better than expected. What's your reaction?
Well, it's kind of expected. At this point, a lot of the news and the noise and the tariffs haven't taken full effect. Companies do have a little bit of a wait and see approach on that. I wouldn't have expected massive layoffs. And at the same time, I wouldn't have expected a lot of hiring. And that's what situation that we're in. Look, there's some lag effects to major economic changes. That's what I think is really going to determine the trend of the stock market and the trend of this economy. Sure, we're pleased overall. Unemployment's hanging in there at 4.2. The consumer is extremely resilient. But there are some other factors below the surface. For instance, in the Washington, D.C. area, all those government layoffs haven't taken effect yet. Those people are still earning money. They're still on the payroll, perhaps till September 30 fiscal year end or calendar year end. So we're going to have a wait and see. And so is the Fed, by the way. The Fed isn't looking at this and going to change policy. I guess they're somewhat pleased that their labor mandate is intact, but they're not going to ease anytime soon, especially with over 100,000 jobs being created.
Okay, so I hear what you're saying about the government jobs. Look, federal government jobs did decline in May, down 22,000. It's down by 59,000 since January. Now, there are obviously those employees who are, for instance, on paid leave or they're receiving ongoing severance pay, so they wouldn't be accounted in this. Is that one of the things that you're expecting to factor in further jobs reports?
Yes, if the DOGE objectives, if the government cuts hold, if the courts allow a lot of these mass layoffs to continue, we're going to then see the economic impact when those people have their household income reduced. Household income is not declined because the paychecks didn't stop with the first dictate of we're cutting here and we're cutting there. And I think that should be discussed. Look, but the economy is resilient. I'm not saying that we're heading towards a recession because the U.S. economy is driven right now by technology. Technology is innovative. It's creating efficiencies. So the more efficient the workforce, the more productive the workforce, the more we can offset some other slowdowns. The other factor, the other elephant in the room is if we've cut off immigration, if we have reduced illegal immigration to almost zero, and we have a tighter handle on legal immigration, we reduce the supply of labor. That's another reason why you saw a strong wage number. I love a strong wage number for the people who are working, but think about it. If we have a smaller supply of labor, the price of that labor is going to go up, and we're going to continue to see that as a somewhat inflationary force if we continue to have tight controls on immigration, which impacts the size of the labor force.
The Fed chair didn't seem too worried about wage inflation in recent times. Do you think that is worse? I mean, 3.9% growth is a little more than expected on a year-over-year basis, but not much more.
Well, that's a great question. And we want to see wage growth in the 3 to 4% so workers have real wage gains. What I'm saying is if we continue to reduce the supply of labor, that will be a headwind in the Fed's fight against inflation. Then what counters that? Technology. And that's why you've seen technology stocks lead the way since Liberation Day. Because if companies are going to operate in a slower growth economy, if they're going to face a higher cost for wages, they are going to want to employ technology. So that is the counteract that we're seeing and why we're still positive on U.S. stocks in general, because we still think this is a growth rally led by technology as it has been, except for a few small blips.
Certainly have to see how those play out. We've been seeing a lot of commentary about that, both from Washington and obviously online as well. That's Mark Avalon, Potomac Wealth Advisors. Thank you so much.